Bismillahirrahmanirrahim. Today we present a research paper about the reality of Islamic finance in light of the new reforms in Algeria by Boudoukha Rached Lamraoui from IIUM Institute of Islamic Banking and Finance. This research evaluates the modernization of Algeria's financial system through recent banking reforms. It focuses on the emergence of Islamic finance as a Sharia-compliant alternative to conventional banking, aiming to promote financial inclusion and ethical investment. The study is authored by Rached Lamraoui Boudoukha, Abdulmajid Obed Hassan Saleh, and Ashraf Sharifuddin from the Institute of Islamic Banking and Finance at the International Islamic University, Malaysia. It serves as a comprehensive look at how legislative changes are reshaping the Algerian economic landscape. Algeria's predominantly Muslim population has a high demand for financial mechanisms grounded in fairness, transparency, and shared risk. These core principles support socioeconomic justice and align with the religious values of the people, fostering inclusive growth through products that avoid interest-based transaction. The study is motivated by the need to understand on how these ethical values can be integrated into a formal banking system. By aligning financial services with the public's belief, the state can build a more resilient and trusted economy that serves all segments of society. The research problem. Despite strong interest, the progress of Islamic finance in Algeria remains limited compared to regional neighbors like Malaysia or GCC countries. Development has been historically hindered by an incomplete legal framework and insufficient institutional capacity within the existing banking sector. Furthermore, there are significant gaps in public knowledge. Low financial literacy and a lack of public awareness regarding how Sharia-compliant instruments operate have slowed the adoption of these services, despite the high theoretical demand. Research methodology. This study employs a descriptive analytical approach to examine the current state of the industry. It provides a detailed overview of the historical development and the current landscape of Islamic banking, ensuring that the findings are grounded in both theory and practical data. Additionally, the research analyzes the relationship between ongoing banking reforms and the country's broader development objectives. It identifies the legislative achievements and while highlighting the practical implementation gaps that still need to be addressed by policymakers. Historical context between 1990 to 2000. The journey of Islamic finance in Algeria began with global influence of AOF in 1990 and the founding of Al Barka Bank in 1991. Al Barka was the pioneer operating as the first fully Islamic bank in the country during a time of a significant economic transition. In the late 90s, the first steps toward a diversified Sharia-compliant market were taken with the establishment of the first tax-free insurance company. These early efforts proved that Islamic finance could function within Algerian context, even with limited legal support. Moved to institutional growth between 2003 to 2011. Between 2003 and 2006, the sector gained momentum through the Zakat Funds project and the arrival of Al Salam Bank. These institutions expanded the range of products available to the public, moving beyond basic retail banking into more complex financial services. By 2011, the Bank of Algeria began issuing specific circulars to regulate participatory banking services and accounting standards. However, these steps were still considered fragmented. There was no unified national strategy to govern the entire industry until much later. 2018-2020, the recent legal evolution. A major shift occurred with the issuance of Regulation Number 1802 in 2018, which established the first formal framework for participatory finance. This law provided the first official definitions for Islamic products, moving from moving them from the niche status into the formal legal code. This was quickly followed by Regulation Number 2001 in 2020, which superseded the previous law to provide more robust governance. This new regulation was designed to modernize the system and provide a clearer pathway for both Islamic banks and conventional windows. Regulation Number 2002 defined operations. Regulation 2002 provides a clear legal definition from the core transactions used in the Algerian market. This includes murabaha for trade financing, mudarabah for trust-based partnerships, and musharaka for equity-based joint ventures. The law also covers ijarah leasing, istisna manufacturing, and salam forward sales. By defining these contracts explicitly, the government has reduced legal ambiguity, making it easier for banks to offer these products and for customers to understand their rights. Centralized governance and Sharia supervision. A critical pillar of the 2020 reform was the creation of the National Sharia Board for Fatwa under the High Islamic Council. This central authority acts as the supreme religious guardian for the financial sector, ensuring that all banking activities remain Sharia compliant. The board is responsible for reviewing every new financial product before it reaches the market. This centralized oversight is vital for building public trust, as it guarantees that a bank's Islamic label is backed by a credible, independent religious authority. Internal supervisory boards. Beyond national oversight, the law requires every bank to have its own internal Sharia supervisor board. This board must consist of at least 3 members who are expert in the Islamic law and are appointed directly by the bank's General Assembly. The role of this internal board is to monitor daily operations and ensure that the bank's management follows the fatwas issued at the national level. This creates a two-tier system of supervision that protects both bank and its customers. Independence of Islamic windows. Conventional banks in Algeria are allowed to open quote-unquote Islamic windows, but they must follow strict rules of separation. The law requires these windows to have their own independent administrative structures and a dedicated manager who oversees only Sharia compliance operations. To prevent any mixing of funds, these windows must use separate accounting records and dedicated IT systems. This financial and operational firewall is essential to ensure that the money in Islamic accounts is never used for interest-bearing conventional activities. Transparency and pricing disclosure. Transparency is a core requirement under Article 19 of Regulation 2002. Banks are mandated to clearly disclose all profit rates, management fees, and the total cost of financing to the customer before any contract is signed. Furthermore, the profits must be calculated based on the actual duration of capital utilization, not on compound interest. This ensures that the relationship between the banks and the client remains ethical and follows the Islamic principle of the profit and loss sharing. Financial inclusion and unbanked. Algeria currently struggles with a high quote-unquote unbanked population, with formal bank account ownership at only 44%. Many citizens avoid banks because they do not want to engage in interest-based riba transactions which they view as religiously prohibited. Islamic finance serves as a powerful tool for financial inclusion by providing a culturally compatible alternative. By offering products that align with the public's values, the banking system can reach these excluded individuals and integrate them into the formal economy. The shadow economy challenge. A massive amount of liquidity circulates in Algeria's informal or quote unquote shadow economy, estimated to be between 30% and 50% of the total money supply. This money stays outside of the bank, which limits the government's ability to fund national development projects. The current reforms aim to mobilize these idle savings by offering Islamic investment accounts. If the public trusts that their money is being handled ethically, they are more likely to deposit their wealth into the formal banking system, boosting national liquidity. Macroeconomic environment. The reforms are taking place in a recovering macroeconomic environment, with Algeria seeing a real GDP growth of 4.1% recently. However, the economy still faces challenges like structural inflation, which reached 9.3% in 2023. In this volatile context, Islamic finance provides a stabilizing effect because it is based on real assets and trade rather than purely monetary speculation. It offers a more grounded approach to financing that can help protect the economy from debt-driven bubbles. Growth data infrastructure between 2020 to 2025. The physical presence of Islamic finance has exploded since the 2020 reforms. The number of dedicated branches and Islamic windows within conventional banks grew from under 50 in 2020 to an impressive 861 by the beginning of 2025. This massive increase in infrastructure means that Sharia compliant services are no longer restricted to major cities. They are now accessible to citizens across all regions of Algeria, facilitating broader economic participation. Customer accounts on the growth data. The public's response to these new services has been overwhelming. In 2020, there were only about 18,000 Islamic banking accounts in the country. By 2025, that number had surged to over 745,000 accounts. This rapid growth proved that the demand for Sharia-compliant banking was previously suppressed. As soon as the legal framework was put in place and products became available, hundreds of thousands of Algerians chose to switch to Islamic banking. Deposit mobilization. The amount of money being deposited into Islamic accounts has also seen a skyrocketing trend. Total deposits rose from 161 billion Algerian dinar in 2020 to approximately 900 billion Algerian dinar by 2025. These figures indicate that Islamic finance is successfully attracting capital that was previously held in cash or in the informal sector. This new liquidity is vital for banks to provide financing for small businesses and national infrastructure projects. Monetary and Banking Law Number 2309. The 2023 Monetary and Banking Law was a historic milestone that elevated Islamic finance to a primary legislative priority. It replaced older, temporary regulations with a permanent law that fully integrates Islamic principles into the National Banking Code. One of its key features was the formalization of the National Sharia Board for the Banking Industry, CNSIIB. This law ensured that Islamic finance is no longer just a project, but a permanent and essential part of Algeria's financial architecture. Practical implementation gaps. Despite the massive legislative progress, several challenges remain. The implementation is currently fragmented across different banks, and there is noticeable lack of specialized human resource who are trained in both modern finance and Sharia law. Furthermore, there is need for more innovation. Most banks are currently focused on basic murabaha for cars or appliances. To truly succeed, the sector must develop more complex investment products for small, medium-sized enterprises (SMEs). Strategic recommendations. To move forward, Algeria must invest heavily in capacity building. This includes training bank staff, lawyers, and accountants in the specifics of Islamic financial contracts to ensure that products are managed professionally and transparently. There is also a need for a massive public education campaign. Many citizens still do not understand the difference between a profit margin and interest. Clearing this confusion is key to building the long-term trust needed for the sector to thrive. Conclusion and the further outlook. In conclusion, Islamic finance in Algeria has transitioned from a small, experimental niche into a strategic pillar of national economy. The new reforms have provided the legal safety and fiscal fairness needed for the sector to grow. The future of Algeria's economy depends on its ability to foster an inclusive and sustainable financial system. By continuing to refine the regulatory framework and promoting innovation, Algeria can become a regional leader in the global Islamic finance market. That's all, and thank you.